What's going on, guys? Welcome to another video. So I kind of wanted to do a little Friday night recap, a little, just kind of talk to you guys a little bit about something that's been on my mind when it comes to trading, because a lot of times I see a lot of new traders. You guys get a lot of FOMO, a lot of fear of missing out. You see the markets open up, you see big spikes, you may see your watch list going off, everything is green. You may be checking social media and seeing this person saying that this stock is moving, or this stock's going to break out, or today's the day, or this, that, and the other. So I'm going to give a very, very perfect example. This example was called out in our Discord. That link is down in the description below. So it was on watch. That stock is Square, SQ. It had a monster move yesterday, broke out on the hourly time frame over the 50-day moving average, and just put up an insane move. So this stock was definitely on high watch for me to see if it can sort of reclaim some levels and see if it can sort of break out. Just to cut to the chase today, I did not take a single trade in the market today. I could have taken this play. I was thinking about it, and I was very, very close to clicking the buy button on this stock. I would have probably made a little bit of money, but just getting back into the focus of this video, you need to stop saying what if. Okay, what if will be the death of your trading career. What if will be what's going to cause you to blow up your account. What if is going to cause you to go red on the day. What if is going to cause you, just to have complete drainage of your mental equity day in and day out if you constantly say what if. And what I mean by that is, if you're currently following SQ, and let's say you did not take this trade, right? Which was yesterday on the 5th of August. Let's say you missed this move. However, you knew that it put up a big move. You were waiting for some kind of continuation. You were saying, what if this just got back to 289? What if this confirmed 289 and went to 295? Which was coming in on the option flow yesterday and the day before, 295 weeklies on SQ. So you're saying people are putting large money bets on there, thinking that this stock is going to go all the way up back to 289, was going to hit 295, and then they could cash out. Today is Friday. Some of you guys like to play those 0 days until expiration on the option side. I like to play them because they're cheap. If you do get a move in your favor, you can go in the money or at the money, and those contracts can really move. But you have to be experienced. You have to have the screen time. You have to have a trading plan. You have to have a system. You have to have rules, and you have to be disciplined. So let me get into this trade. This $280.83 was the pivot. It was an area that I was watching. If it could confirm this, which it was working towards in the pre-market, excuse me, in the pre-market, it was working towards this level. And if it broke out, it did have room to run. It had about 5 points of room to run. You can see this blue line here is the linear regression line. This is a supply zone here. This is definitely an area where, there could potentially be some sellers, where it could potentially hit some resistance. And I'll get into that in just a minute. But let's say, for example, right off the opening bell at 6:30 in the morning, this candle confirmed this 280 pivot. You could have taken this long here. Let's say you took 10 contracts that were costing, I think they were costing anywhere between $30 and $40 a contract for the 285s weekly expirations. So very, very cheap. You could have got 10 contracts of these, for about $300. Those contracts probably would have put in anywhere from between a 30 to 50% move on your contracts. And if you were smart, and if you had the discipline and the knowledge, and you could control your emotions, you could have got in, rode this little spike up here. This spike lasted 5 minutes, maybe max. Let's actually pull up the 5-minute chart and see how long that this actually lasted. So here's 6:30 a.m. and you can see right here the 5-minute candle just within 5 minutes exploded through the pivot of 280, put in a high of 285, and then immediately 5 minutes later put in another high at 285.88, and then started to retrace, started to come back in. Next candle opens up 283, and then started to come back in, came all the way down below the pivot point of 279.53. So here's where things can get confusing and where things can get really, really bad if you keep telling yourself, what if? Let's say you entered in here over the breakout of the pre-market highs. You got in here, you've seen your P&L start to go up, you've seen your contracts increase, or let's say you took shares, and let's say you took 100 shares and you see it go up $100, $200, $300, $400, and you said, okay, here it is. What if it gets back to 289? What if it gets back to previous days highs? What if it takes out previous day's highs and it continues to go higher? What if 5 minutes later, this candle spikes very, very quickly, immediately comes back down. Now it's starting to work against you. And as it's working against you, you start to say, well, what if it starts to come back? What if we find a bounce? What if it bounces off this upper Bollinger Band, comes down here, breaks the upper Bollinger Band, immediately reclaims it, following a preceding 5-minute candle. So now we're 15 minutes into the day, just red, 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 red. And at this point, you're probably telling yourself, oh shit, what's going on here? Comes all the way down to your break even price here. If you're playing on the option side of contract, on the option side of things, you're probably starting to get those premiums eaten up, and you're probably starting to lose value. Those contracts could be, either at break even, or you could be in the negative already just because of how violent the move was to the downside. Let's say you did not sell at break even. Let's say you did not sell up here. Let's say you did not sell up here, and you're holding because now you think the market's going to bounce. It's only been 10 minutes. It's only been 15 minutes that the market has been open. The NASDAQ 100, the triple Qs, everything is going to, kind of fading. Maybe things are going to bounce back, and you keep telling yourself, what if it just bounces back? What if it finds support and it comes back and retests these highs? I'll just sell at, break even, or I'll just sell if it gets back to 284. It never came back. And the longer you held those contracts, the longer you held those shares, the value was just decreasing. If you were trading equities, you were losing money, and these contracts went to 0 days till expiration. Very, very dangerous. If you do not get in off a break, get that immediate 20, 30, 40% pop and just sell out. Whether that takes 30 seconds, a minute, 20 seconds, 10 seconds, however long that takes for you to see an immediate influx in the premium on those option contracts, you just have to sell. Who cares if it goes back to 285? Who cares if it takes out yesterday's highs at 289? Who cares if it goes to 295, which was on the options flow? Who cares? Nobody cares about how much money you would have made if you would have held. Nobody cares how much money you lost out on if you sold right here or you sold right here. Nobody cares at the end of the day. There's not one person on social media that's going to care if the move went up $20 today and you sold out for a profit of $100 and you could have made $1,000. Nobody's going to care. Nobody's going to care if you held all the way down through here and you ended up losing money and those contracts went to 0. Nobody's going to care. You know who's going to care? The only person who's going to care is you. Okay, so you have to stop telling yourself, what if it comes back? What if it takes out yesterday's highs? What if it goes higher? Nobody cares. Nobody cares. You have to get in on a move like this. You have to take your profits super fast. And if you cannot take them super fast and you do not have that discipline, you should not be scalping opening range breaks off of the pre-market highs, period, whatsoever. So the reason why I did not take this trade is because we immediately got this, excuse me, where am I at here? We immediately got the spike above, right here. We immediately got the spike above the pivot point. It moved so fast that by the time I was ready to click the buy button, we were already in this range. And I told myself, we're coming into supply here at this linear regression line. If it gets rejected, which it did to a T, guys, you may think that all these lines on my screen are just, ridiculous. You may think that all these lines on the screen, they don't mean anything, that it's too much clutter. Where did this stop? Right at supply. And did we ever get back to supply? We never got back. We continued to sell off. Now, the rest of the market continued to sell off as well. NASDAQ took a little bit of a down day, down 75 points. However, that's besides the case. If you got in at this level, you should have just taken profits when you could have. $20, $10, $100, depending on your size, $1,000. It does not matter. If you get an explosive move that fast within the first 5-minute candle, you have to just take profits as soon as you are green, as soon as those contracts start to increase in value. And you cannot tell yourself, what if it just comes back? Because you know what? The stock market doesn't have to do anything, and it never came back all day. And if you did buy these contracts anywhere in this candle, you never reclaimed your money back at all. It never came back to break even. It never came back to previous. You have to quit telling yourself, what if? So I just kind of wanted to make that point. I obviously didn't take a trade. It never came back. So if my pivot point was $280.83, it obviously came up in here into supply. What I would have been looking for on the hourly chart was for the 7 a.m. Pacific Standard Time candle to take out this high of 285.90, which was over our pivot of 280. And as soon as it took out that 285 area, I would have looked to get long on the break and try to ride this into the next area of supply, which would have potentially been this 289, 290. However, it never confirmed for me. There was never another setup on this chart to take, which is why I did not take the trade in here. I hope that kind of helps you guys out. Stop saying, what if?